So this is a simple example of filing the T2 corporation income tax return. We will start by preparing some information that will make it easier for us to fill out and submit the return online. It is always a good idea to prepare information before we start. So we will need information about the balance sheet as at the end date of the fiscal year, information about the income statement from the first to the last day of the fiscal year, GIFI report, NAICS, which is the North American Industry Classification System, EFile number and password, and the last year's notice of assessment, especially the part of the explanation of changes and other important information. So all the information that we are going to prepare will be based on the company's fiscal year. So each company will have a different fiscal year than the other one unless the company requests to have the fiscal year equal to the calendar year, which means that both of them will end on December 31st. If the company does not make any request or any changes, then the fiscal year of the company will be determined according to the date when the company was incorporated. You can find this information on the articles of incorporation of the company. So in our example, the company was incorporated on February 21st, 2021. So we will determine the first fiscal year start date from the exact day of the incorporation date, which is the 21st of February 2021. The end date of the fiscal year will be one day less than the 21st, then it will be the 20th of February 2022. The second fiscal year will start from the 21st February 2022 to the 20th of February 2023. And the third fiscal year will start from the 21st of February 2023 to the 20th of February 2024. In our example, we are using Sage 50 as the accounting software. So we will go to reports, financials, and we will go to balance sheet. The fiscal year will be the 2024, which is correct. As at, we can choose from here the last fiscal year, and the system will give us the date of 2024, February 20th, which is correct. So in our example, we are going to use UFile T2 tax preparation software, which will accept whole numbers only. While the balance sheet report that would be generated from Sage 50 usually will have 2 decimal points. That's why I will usually print a PDF format of the balance sheet with 2 decimal points to have the information available with me. At the same time, I will export it to an Excel sheet and try to round the number into the nearest whole number. Sometimes my system will not help me to make any changes, so usually I will highlight the columns, then convert it to number. Then after that, I can change the format. I will decrease the decimal places and usually will change the format into accounting or comma to make it easier for me to understand. And now we are going to prepare the income statement the same way as we did before. Also from the accounting system, we will go to reports, financial, income statement, and the fiscal year will be 2024. That is correct, as we have it here. The income statement will be for the range, and we can choose from here the last fiscal year. The system will give us the start date of the fiscal year, which is the 21st of February 2023. That is correct. And the finish date of the fiscal year will be the 20th of February 2024. That is correct. We will press OK, then we will do the same thing. We have to print the PDF with 2 decimal points of the income statement. We can export it to Excel sheet and try to format it to the nearest whole number, decrease the decimals, and we can choose the format of accounting or comma to make it easier for us to understand. And now we can prepare the GIFI codes that will make it much easier for us to enter the information into the tax preparations software. So we can go from Sage 50 to File, Import, Export, Electronic Filing, Export GIFI. Then the Export GIFI file window will open and it will ask you choose which year to export. You can press on previous year if you already advanced to a new fiscal year in the system, or otherwise choose current year and then press OK. Now you can download or save the GIFI file, which will be ending in GFI. After saving the GIFI code file, we can download it to the tax preparation software in order that the software can extract the information, plug it in, and make it easier for us. And of course, it will be more accurate. But unfortunately, in my personal case, every time I try to download this file, the tax preparation software will not accept it and will give me error. But still, it is very helpful for me, even if I try to enter it manually. So if you double click on the GIFI code file, it will open and it will look like this. At the top, you can see some information about the software and the company. Then you will have a list of all the GIFI codes of all accounts over here. So this list will be of the assets, liabilities, equity, revenues, expenses, and net profits, everything. It will be all showing in one list. And then, of course, the amounts over here. As you can see, the amounts are in 2 decimal points, but we don't have to worry about that because we already prepared the whole number. And now we can prepare the North American Industry Classification System NAICS number. Here we can select the sector that best describes the field and activity of the company. If, for example, the company is a bookkeeping and tax preparation services, then the best sector to describe the services of the company would be professional, scientific, and technical services, and the code will be number 54. So if we expand the code 54, we will find a general description of accounting, tax preparation, bookkeeping, and payroll services. We are trying to find the code that describe the services in details, and in our case, we can see that bookkeeping, payroll, and related services in Canadian class only would be the best description of the company. So the code that we can choose is 541215. We can find helpful information on last year's notice of assessment, especially the last portion of the assessment where it states explanation of changes and other important information. For example, the balance of the loss that we can use, or if they set your balance due date to the end of the second month after the end of the tax year. This information we can use when we are preparing the return. Now we can start preparing and filing the return. I usually have a personal preference to use a bigger screen because I don't have to scroll up and down when entering the information. Also, I do prefer using the Google Chrome browser. It makes it much easier to process the payment and file online for the tax software. Now we can go to the CRA Certified Software. They will give you a list that you can scroll down and choose the software that you prefer. In our example, we are going to press over here and choose UFile T2. Now you will be directed to the sign-in page. Now you can sign in, enter your ID and password, then choose I'm not a robot and sign in. When you are signed in, please notice at the top of the page there would be two tabs, one for UFile T1 and the other one for UFile T2. Please make sure to select the tab for UFile T2. Under Taxpayer List, you will find last year's filing, 2023. Please select Add Tax Year over here. So we have to confirm the tax year, which is the end date of the fiscal year of the company. You can find this information on the balance sheet that we already prepared. You will find the date of the balance sheet as at 2024-02-20. So 2024 will be the tax year. Also on the income statement, the end date of the fiscal year will be 2024-02-20. So 2024 will be the tax year. So after we confirm the tax year, we will be directed to UFile T2 and the year 2024 as we confirmed. At the top of the page, the software will have 5 tabs, starting with the Start tab, where we can start a new return over here. Then we will have Interview to answer some questions, Review to review the return, Tax Return to save and download the return, EFile to submit it online. The interview will start by the identification of the corporation, and we will enter the information about the corporation over here. Starting with the corporation's name, we will enter the corporation's name as it appears on the articles of incorporation over here. Corporation's tax year end, we will find this information on the balance sheet as at, and this will be the end date of the fiscal year of the corporation. Does the corporation qualify for the 1-month extension of the date, the balance of tax due? We reviewed the last year's notice of assessment, and we can find the answer over here. Jurisdiction of charter and incorporation date. The jurisdiction in our example is Ontario, and this is the date when the company was incorporated, and you can find this information on the articles of incorporation. Beginning date of operations, if different than incorporation date. In our example, they were the same, so we left it blank. Corporation's business number, including the RC0001 at the end, will be entered over here. Is this the first federal return? In our example, no. Is this the final federal return? No. Provincial jurisdiction of permanent establishment, in our example, Ontario. The language of correspondence, English in our example. Corporation's electronic mail address, you enter the business email address over here. Is the corporation active or inactive? If active, enter the type of activity. In our example, regular corp. Specify activity, we can enter bookkeeping and tax preparation services. Enter the North American Industrial Classification System code, NAICS, that best describes the corporation's main revenue generating business activity. We already prepared this code, so we can choose it and enter it over here. If the corporation is active, specify the principal products or services provided, giving the approximate percentage of the total revenue that each product or service represents, 3 maximum. In our example, we put bookkeeping and tax preparation services, and it is 100%. If the corporation is active and the corporation's major business activity was construction, did the corporation have any subcontractors during the year? In our example, the company was not a construction company, so we left it blank. Corporation's internet business activities. Did the corporation earn income from one or more web pages or websites? We can write no. Quarterly installments. If the corporation qualifies to be a quarterly installment remitter, does it want to be considered as one? We can write yes. Does the corporation have a perfect compliance history to be eligible for quarterly installment? We can choose yes and then press next. Now we are going to enter the information about the tax preparer. We are going to enter all the information about the person or the firm that prepared this tax return, starting with the name of addressee, the position or title, first name of person to contact, last name of person to contact, telephone number, day, fax number, the federal representative identification number, 7 alphanumeric characters, the rep ID number, email address of tax preparer, street, city, province, postal code. Then under notes, if you want to enter any permanent notes regarding a client, you can enter it over here and then press next. Now we are going to set up the e-file. If you wish to e-file the tax return for this corporation, please enter the e-file setup information below. Do you wish to e-file the federal return? In our example, we choose yes, if eligible. Your federal return will be transmitted under a web access code WAC. If you wish to transmit your return using an e-file number, then please enter your federal number here. We already prepared this information, so we can enter it over here. My Business Account Online Portal CRA. We already have the information there, so we have to leave it blank in order to transmit the file. So, do you wish to register for email notification? Leave it blank over here. Corporation's electronic mail address, leave it blank. Now we are going to enter the head office address for the corporation. Name of addressee, street, additional address information of the corporation, suite number, post office box number, city, province, postal code, person to contact, telephone number, day, fax number. Has the head office address changed since the last time a T2 return was filed? No change in our case, and then press next. So if the company has different addresses, for example, if the company performs work from the head office at a certain address, but receives mail on a different address, and keeps the books and records in a different address, then we have to add all of the other addresses from here. And now we can select the type of corporate officers. Some corporations will have their directors assigned as a signing officer of the company. So in this case, we are going to enter the information for the director and signing officer here. Others will have the two roles separate. So in this case, we enter the director's information separate from the signing officer. Other companies will have shareholders as individuals, or shareholders as corporations or others, or officers only. In our example, the company has one responsible person who is a director and signing officer, But in other cases, if the company has more than one responsible person, then we have to enter the information for each director and signing officer of the company, starting with the officer's first name, officer's middle name, officer's surname. Has there been a change of director since the last return? In our example, no. Date the director was elected, to be entered here. Is the officer a non-resident of Canada? In our example, no. The officer resides in Canada. Is the officer also a shareholder of the corporation? In our example, yes. There weren't any previous last name of shareholder, previous first name of shareholder, previous middle name of shareholder, so we left here blank. If the shareholder is a non-resident, enter the class and percentage of shares held. It does not apply in our case because, as we said, the shareholder resides in Canada. So we left here blank. Percentage of voting shares held by the shareholder. In our case, the shareholder owns 100% shares of the company, so we enter 100% here. Percentage of common shares held by the shareholders. In our case, the shareholder owns 100% of common shares of the company. We are still continuing to enter the information about the director and signing officer of the company. You will find a question about the percentage of preferred shares. In our example, we left it blank because the shareholder of the company owns 100% common shares of the company. Now we can enter the social insurance number of the corporate officer, title, position, the officer address, additional information, name of addressee, city, province, state, country, if not Canada, postal code, USA, zip code, foreign postal code, officer's telephone number, officer's fax number, and the date on which the return is to be signed. You can choose to enter the date over here if you know it. If not, you can leave it blank for the software to determine when filing the return. And now we can import the GIFI file that we already prepared and saved on our computer, which is the General Index of Financial Information. Standard GIFI files produced by third-party software such as Caseware or Simply Accounting. So in our case, we use Sage 50, which was called Simply Accounting previously, can be imported into UFile T2. So we have to choose the file from here and then press on import. Unfortunately, in my personal experience, I will always get an error occurred while trying to import your GIFI file. Please make sure that it is a valid GIFI file and try again. In this case, I will just press next and continue entering the information manually. And now we have to enter some information about the GIFI by selecting Update Net Income and Tax on Capital Pages from GIFI. The net income and tax on capital pages will be automatically updated from information on the GIFI pages. I selected Update Net Income and Tax on Capital Pages. Were the corporation's financial statements prepared using International Financial Reporting Standards IFRS? Our example, the company is a small private company and we did not use the IFRS system. Notes to financial statements, we left it blank and then press next. Now we can enter the information manually. I do prefer to start with the income statement information first. So we will enter the revenue, cost of sales, operating expenses, farming revenue, farming expenses, extraordinary items, and income taxes. As you can see, the GIFI codes for the income statement will start from 7,000 to 9,999. So on the list that we already prepared, we are going to start from here, and we are going to look for each GIFI code that we have on the list, find the box in front of it, and enter the whole number that we already prepared. At the end, the net profit or loss should be equal to the net profit or loss that we have on the financial statements that we already prepared. Now the system will take this net profit or loss and automatically enter it into the appropriate box on the retained earnings of the balance sheet. And now we can start to enter the assets and liability GIFI codes on the balance sheet. So if we have the asset GIFI code 1002, we will find it, and in the box in front of it, we will enter the whole number that we have on the list. Also, we have to make sure that the totals are equal to the information that we have. So, for example, 2599 total assets, the amount that will show over here should be equal to the number that we have it on the list. And also the total liabilities 3499 will also be equal to the amount that we have. And now we can start to enter the retained earnings information, starting with the beginning balance of the retained earning over here. The net profit or loss will be automatically entered by the system over here. The ending balance of the retained earning will show over here and also will show over here. This is the part of the shareholders' equity, and we can continue entering the information for the shareholders' equity. For example, 3500, the GIFI code stands for the common shares, and we can enter the information over here. At the end, we want to make sure that the total liabilities and shareholders' equity is equal to the total assets amount. Now we are going to enter the information about the preparation of the financial statements. Whether or not you can identify person primarily involved with the financial information, more than 50%. In our example, we said yes, because we can identify the person who prepared the financial statements. If you can identify the person primarily involved with the financial statements, select the type of preparer of the corporation's financial statements. Here we can indicate if the preparer was designated and connected to the company or not. So for example, if the owner of the company was the same person who prepared the financial statements, we have to indicate that they were connected. In our example, the company was a small private company. We did not follow the IFRS system. So the other questions we will leave them blank. Indicate the level involvement of accounting practitioner with the financial statements. In our example, we did not audit or review the financial statements. We left it blank. GIFI checklist items applicable to the corporation. In our example, we did not attach notes to the financial statements. We left it blank. Are amounts in income recognized as asset impairment loss or fair value changes? Does not apply to our case. We left it blank. Asset amount recognized in net income, if there were any increases or decreases, it does not apply. In our case, we left it blank. Asset amount recognized in other comprehensive income, if there were any decreases or increases, we left it blank as well. And now we can enter or review the automatically populated information about the net income. Net income as per financial statements will show over here. Provision for taxes as per financial statements, if any, will show over here. If the company owns depreciable tangible assets or intangible assets, then the depreciation and amortization recorded in the books will show over here. If we did any adjustments to the income or loss of the company, For example, if we added 50% of the meal and entertainment expense to the net income, then the additions to net income or loss as per financial statements will show over here. If we did any deductions from the net income or loss as per financial statements as part of the adjustments, it will show over here. The total sales of corporation during this taxation year will be populated over here, as well as the total gross revenues. And now we are going to talk about the tax on capital, describing the capital of the corporation. Is the corporation eligible for a capital tax exemption? We will determine it over here. Description and amount of taxable paid up capital elements. In our example, we stated the paid up capital stock, and we entered the total amount of common shares over here. Another line for description and amount of taxable paid up capital elements. We stated the returned earnings deficits, and we enter the total amount over here. Description and amount other taxable surplus. In our example, the company does not have any taxable surplus. We left it blank. Description amount eligible property investments for deductions from capital. In our example, the company did not own any investment properties. We left it blank. Name of issuing corporation and amount of shares of other corporations. In our example, the company did not own any investments in stocks of other corporations. We left it blank. Name of issuing corporation and amount of other loans, advances to other corporations. Also, the company did not make any investments in bonds of other companies, so we left it blank. Total assets at year-end date for financial statements, it will be populated over here. Description and amount of adjustments to assets on balance sheet will also be appearing over here. These following steps did not apply to our example. Status change for the corporation. Final return up to dissolution. Ceased eligibility as a quarterly installment remitter. We pressed on next. Charitable donations. Charitable donations of the company. We pressed on next. Non-depreciable capital property for shares, real estate, bonds, other property, personal use property. We pressed on next. Income source. Other property income. Dividends received from other corporation, we pressed on next. Dividends paid, taxable dividends paid, capital dividends payable per subsection 83.2. Capital gains dividends, we pressed on next. GRIP or general rate income pool did not apply to our example, as it was a small private corporation that did not pay any dividends through the year. Actually, it was a CCPC, which is Canadian controlled private corporation that did not pay any eligible dividends through the year. GRIP at the end of the previous tax year, nothing over here. Amount respecting dividends, we left it blank. GRIP adjustment for specified future tax consequences to previous tax years, we left it blank. Amount before specified future tax consequences, we left it blank. Amount after specified future tax consequences, blank. Elected amount of excessive eligible dividend designation to be treated as ordinary dividends, we left it blank. And now we are going to talk about the capital cost allowance, CCA. In our example, the company did not own any depreciable assets, so we did not enter any information. The simplest way that I can describe it is that from the accounting point of view, We have depreciation expense and accumulated depreciation account. As from the taxation point of view, they do not accept the depreciation expense, but rather will allow us to deduct the capital cost allowance, CCA, and we can track the balance using the undepreciated capital cost, UCC. That's why sometimes we make adjustments to the net profit, trying to delete the effect of the depreciation expense first by adding the depreciation expense to the net profit, and then deducting the CCA, which was allowed to be deducted, the capital cost allowance. From the taxation point of view, they will divide the depreciable assets into classes, and each class will have its detailed description, and also each class will have its own rate to calculate the amount. Also, the method for calculation will differ from one class to the other. Some will have the straight line method, others will have the declining balance method. So everything will be detailed for you just to determine which class the depreciable asset will lie under, and then you can choose the class and enter the information from here. And now we are going to talk about the losses and if you want to carry the loss forward or backward, if the loss is capital or non-capital. So for the non-capital losses, you can carry it forward or backward. Year and amount of unused non-capital losses to carry forward. First prior year will be populated over here, if any. Year and amount of unused non-capital losses to carry forward. The second prior year, if any, will be populated over here. Tax year loss to be applied to and desire to carry back amount will be entered here. If you want to add more lines, you can press over here. Amount of loss applied. If you wish to claim less than the maximum loss allowed, then you will enter your choice over here. Now we are going to talk about the corporate minimum tax, CMT, losses or credits. As we explained before, that our example is a small private company and it was not a large corporation or associated with any other corporation. So if the company incurs losses for several years, you may find that the amount of corporate minimum tax CMT loss and year incurred will be appearing over here. And the amount of corporate minimum tax CMT credit carryover and year of credit will appear over here, if any. Limit to corporate minimum tax CMT credit claimed will appear over here. The following does not apply to our example. Reserves, capital gain reserve all jurisdictions, other deductible reserve Quebec, other deductible reserve books Quebec, tax paid non-deductible reserve Quebec, doubtful debts Federal Alberta, undelivered goods and services not rendered Federal Alberta, prepaid rent Federal Alberta, returnable containers Federal Alberta, unpaid amounts Federal Alberta, other tax reserves Federal Alberta, insurance corporations policy reserves Alberta, bank reserves Alberta. Then we press on next. Deferred income plans, registered pension plan, registered supplementary unemployment benefit plan, deferred profit sharing plan, employee profit sharing plan, pooled registered pension plan. Then we press on next. Transaction with shareholders, officers, or employees. If there were any transaction between the company and the shareholder, the officer, or employees, then we can press on next. Annual return for Quebec annual return and Alberta, we press on next. Installments paid installment paid to Federal, Quebec, or Alberta, then we press on Next. Also, the following does not apply in our example: refund or balance owing, tax refund information, tax payment information, and then we press on Next. Capital dividend account CDA, CDA components except for eligible capital property, CDA components list of ACP for tax years ending before February 28, 2000, CDA components list of ACP for tax years ending after February 27, 2000, and then we press on Next. Corporate history, we can enter manually the first prior year, second prior year, and so on. So for example, if you are entering the first prior year, we will be entering the taxable income, eligible, refundable dividend tax on hand at the end of the previous tax year, non-eligible, refundable dividend tax on hand at the end of the previous tax year, eligible dividend refund, non-eligible dividend refund. In our example, we'll have them blank. Did the corporation claim the small business deduction in the previous year? In our example, no. Large corporation amount at line 415 of Schedule 200. In order to calculate the small business deduction, we left it blank. Taxable paid up capital in prior year, we left it blank. And date of prior tax year, it was entered. Total assets as at previous year-end date from balance sheet to be entered. Inclusion rate and amount of prior year capital gain for carryback purposes, we left it blank. So after we complete the interview, we'll be directed to the Review tab. We will find a summary about the results of the calculations. So the company will either have a refund to receive or amount due to pay. So still on the Review tab, we will have messages. Starting with the warnings, we will try to read through them. And also at the bottom of the page, you will find errors, warnings, and information. We will try to go back to the interview and fix them. And then at the end, we want to make sure that the return can be filed electronically. Then if we press on Federal on the Review tab, we will find a summary of the Federal Schedule 200 summary. Make sure that the taxable income will be equal to the profit or loss that we have. Also, there will be description about the small business deduction. Then press Next. If you are ready to pay, review the return and proceed to checkout to make a payment. If you still need to make any changes to the information of the return, you can do that except for two things: corporation's number and tax year end. Make sure they are correct, then proceed and process the payment. Now on the Tax Return tab, we can download the PDF format of the return and also the federal print. If we are looking for a specific form, for example, the T183 Corp, we can scroll the left-hand side and find it over here. Now we can e-file the return. If the return was ready to file, we can submit it, and the filing status will show that the file was accepted. The federal submission will show the date and time and confirmation number of accepted files that we can print.